When I was broke, I had rich habits. When I was broke, I had rich habits.
All right. That's us. That's the applause. We're back.
Welcome back. Episode 17.
Episode 18. Man,
Damn,
we
I can
literally
never
wrote
get
it
it.
down at the start of the last one specifically for this reason.
We didn't write it down this time, and I got it wrong.
Yeah. Neal, what's going on? We're back in the studio. I feel like we've been doing a couple in quick succession here, but I know you've got some big travel plans coming up.
Yeah, I'm heading down south, North Carolina, to look at some apartment buildings. Just always heard that the States are a good spot to invest. They have some beneficial...
United States, you've heard that that's a good place to invest.
Yeah,
That's
I
nice.
have.
I've heard good things about
Yeah,
them.
I've heard good things. But honestly, on the real estate side, they have some really good rules, tax incentives, and more competitive markets. So I just wanted to take a look, see what the difference is, right? What 60 a door here buys, what 60 a door there buys, what there is for opportunities. I did notice when shopping, like, I guess Halifax is a small city, but when I shop here, there's like one or two multi-units on market, and it's all the same 50 people that go through. There, I filter by 20 unit, and there's 15 options in each city.
Yeah. Our market here, everything, well, not everything, but a lot of things still trade hands like quote unquote off market, like not on some organized platform, like they're maybe more common in the States and not like single family residential stuff. It's not who you know, but again, like these things get shuffled around like, oh, did you hear so-and-so's shopping this and blah, blah. So it's hard to kind of find, but it's cool to see other areas like, oh my gosh, you just have a bunch of choice.
There's
You might actually be able to shop for different things.
It feels like here almost a few years ago when they used to have stuff on market and you could kind of make your pick.
Why
But
North Carolina?
So I started this process of wanting to buy in the States probably about a year and a half ago. And so I went through all the states and it went through kind of a mixture of like where's having the most population growth. So the East Coast is actually having a big migration from west to east. So
Really?
the East Coast in general is doing really well. Everyone points to Texas and Florida. My thing is I don't like going to places that have already kind of had that massive amount of growth. And so those places have been having a lot of growth for years. So I feel like I'm showing up to that party a little late. North Carolina has been growing quite a bit for the last year or two, but not as aggressively. And then there's a lot of tech companies that are moving and setting up shop there. So like biggest notable one's Apple outside of Raleigh. They're setting up a giant campus. And there's a bunch of other companies that are also setting up shop there. So it kind of just, it almost reminded me of Halifax, to be honest with you. Just like the population base, the diversity, kind of the rents, the per door cost, everything was kind of reflective. And I was like, okay, maybe I'll have a better handle because I know Halifax well. I might be able to translate some of that info and knowledge to a place like Charlotte or Raleigh.
Is it a dry state? Am I imagining that?
I think you are.
Okay.
Dry as in like liquor?
Yeah. Can't be.
I don't know.
Why did I
I'm
think
changing
that?
all my plans if I get there. And
No. My buddy went to North Carolina. I remember him saying something like it was a very dry state in terms of booze. But that's cool. What sort of cap rates are you seeing down there? Because we struggle to get a cap rate over 5% when you're buying these days.
And that's honestly the same. So I had the conversation with them yesterday, and like I originally portrayed, I was like, I want to be buying like 6+ when I get down there, and they're like, no chance in the world that you're going to buy 6+ because they're having the same thing where stuff is selling 3-4s, people are getting their rents up, and it's ending and stabilizing at a 5.5. So it's honestly super similar to Halifax now, and I'm already starting to feel like maybe I'm too late because when I looked at it a year ago, I was seeing stuff at 5s and 6s, and now even talking to him, he said like a year from today. Or some of these buildings that are on at like 125 a door, he said we're trading at 85 a door last year, which is again so similar to what we're seeing here. And so I'm like, maybe I'm a little bit late to the game, but I think there's also, if there's people buying at 3.5s, that obviously means that there's an opportunity for rental increase.
Yeah. That's a cool thing about real estate is no matter where you are, a lot of the principles apply the same. Cap rate's the same, no matter what language you're speaking.
Yeah.
Money's money, bricks are bricks. You have to learn the nuance of the market from a rent perspective and even just the cost of trades and things like that, but it's probably cheaper down there, I'd imagine.
Yep, big time.
And the tax implications and the tenancy laws. So I don't know how much time you've had to dig in around those, but the actual idea of money in, money out is very similar no matter where you go, and this is why areas need to be very careful about how they encourage or discourage landlord business and development business because people will take their money elsewhere. And I'm kind of stubborn. Like I try not to go more than 5 blocks from my own house. But
Been pretty good at doing it too.
Yeah, totally. I stick kind of close to my own neighborhood. But no, that's exciting, man. I'm keen to hear.
I will report back what I find.
Yeah. And Tanner, why did I think that's a dry state? Can you look that up? I don't know why that would have been.
I
But
can't do it right now, but
anyway, what else is new?
Not much really. Just surprised by the numbers here. That's all it is. We were talking about a portfolio we're looking at earlier. It's about 100 units, and I cannot believe the numbers that people are charging for stuff. So.
Yeah. I mean, there's it's desperation. People are just so hot to trot to buy something that just finding something, it gets people keen on it right away. And then I think there's just some speculative pricing out there.
Yeah.
And that's not where those prices will probably land.
Yeah.
But
everyone's hopeful, and there are people that are coming out of town that are willing to spend the money.
yeah.
But anyways, we want to get into today's topic.
Yeah, we got a guest again today. I think
We have another guest.
It's always exciting when we have a guest because we've mentioned many, many times on this podcast that we can tell you what we've done.
Yeah.
And I've done things one way, you've done things another way. I've met with people that have done things differently
very
also.
different way, yeah.
There is no right or wrong way to do this. And there's also many different avenues through which you can invest in real estate. I was talking to someone today about REITs, for example.
Yep.
I've alluded to other people who should just get into money lending and be kind of the back end sort of money maker in real estate, assignments, finder's fees, all
Keep
these
your
different
hands
things
a
that
little
we've talked
cleaner.
about. So we've got a guest on today who's going to talk about some other things. So Neal, you want to?
Yeah, I'll introduce her. So she is a real estate investment and wealth specialist, and she is the founder of RPI, Monika Jazyk. And so she's joining us today from, where are you at, Monika?
I'm in Toronto.
She's in Toronto, a very exciting real estate market.
Yeah. All of us East Coasters love to talk about Toronto, even if we don't know anything about it. It's just everything in our minds, we just hyperbole about Toronto.
Everything's based on Toronto. We say,
Yeah.
like Toronto.
I've heard this happens in Toronto. Oh, we're getting like Toronto here. That's what people love to
You
say.
are getting like Toronto.
Oh gosh.
Oh, no. It's definitely it's a hot word. Toronto, Vancouver. Those are the two that everyone likes to talk about. So, yeah. So, Monika, I think today we're gonna try and get into some of these. Monika has a lot of knowledge, experience doing, I think, also the hands-on investing, but also with alternative options and things like that. So,
Yeah, really high level, Monika. Why don't you just tell us a little bit about yourself, your background, and how you got to what you're doing now, and what exactly are you doing now?
Great, sure. So my name is Monika Jazyk. I'm a real estate specialist and wealth builder and founder of RPI. And our goal at RPI is to educate and empower everyday people to invest like the top 2%. And the top 2% primarily invest in real estate.
Yep.
So they say 90% of the world's millionaires have real estate in their portfolio, and yet only 6% of the population invests in real estate. And I believe RPI is a global company. So I loved the conversation on the US. Great market. North Carolina, by the way. Same with Atlanta,
okay.
Texas. Love the US. We have chapters all throughout the US. We have chapters in the Maritimes. We have chapters all across Canada.
And for listeners, what does RPI stand for?
Real property investments.
Okay, so if people are looking for you online, that's kind of what they can search up. But continue, yeah.
Yep. We just did a rebranding play to RPI Education because when we started as Real Property Investments, our tagline was Real Property Investments helping real people build real wealth in real estate. And what was so important to me about the name of the company was real, the play on the word real, because I'm an everyday person and I want to help everyday people. This has always been my passion. And I do want to help everyday people invest in real estate because I know how scary and intimidating real estate can be.
Mm-hmm.
That's kind of,
I don't think just 6% of the population want to invest in real estate. I think 100% of the population wants to invest in real estate, but they just feel like it's reserved for the wealthy. It's reserved for this top 2%.
This was kind of the idea with our podcast in general, was just this idea of, okay, how do we make this more relatable to people out there? Because as much as we like to feel like, okay, we have this wealth of knowledge and this experience, what we're doing is not rocket science. It's simple ideas applied with diligence, with a little bit of guidance. It just takes a bit to get started. And we've spent a lot of time talking about how Neal got started, how I got started. How did you sort of get started?
Okay, well, I do believe the reason why people don't do it is because a confused mind does not act.
Mm-hmm.
And people need to help get started. Now, how I got started was I had to do all this on my own with my husband. I was one of those people. I distinctly remember looking out the window thinking I knew I wanted to invest in real estate. We knew we wanted to do something different because the traditional way of investing was not working for us. And we made a huge decision as a young married couple, almost 20 years ago, that I would be a stay-at-home mom. And so that was our number one decision. And then we made another decision, which was to move from Australia to Canada, where I'm from. And so we did it with one baby in tow, and then I'm out to here expecting number two. My husband's making great money working, but we really felt that financial pinch as homeowners in an expensive market and really realized it takes two salaries to just get by. But I really wanted to be there for my family and wanted to have that freedom in my life. So I wasn't the financial plan.
Right.
Mm-hmm.
And it was really a difficult thing to do, but it really made me take finances because I don't have a business background, finance background, or anything. And I had to learn it all on our own. So rewind way back then, we were doing like wealthy barber strategy, trying to save 10%, of our money, investing in RESPs, RSPs, all these sort of things. Mm-hmm. And I really realized this was not working. We were not getting any closer to our financial goals. And the only solution was for my husband, who was making over six figures, to continue doing that and for me to join him on that. And I did forfeit a career where I would have been making that.
And
I
was
very
he
cognizant of that?
Was he working in real estate or another?
No, not at all.
What would you, was there?
Neither of us had any real estate, any business, any background. We were totally entirely. So all we knew was I wanted to be home and have that freedom. So at least one parent is there for children. Mm-hmm. And we wanted to be able to afford it. And we didn't want to settle, like compromise. Like I didn't want to be put in the box that I was pretty much put in.
Was there a key moment that you decided it was going to be real estate? Because I know Neal had his Forbes list of wealthiest people and realized they all did real estate. Yep. For me personally, it was just advice that a mentor of mine mentioned of how even people who own their own company or are in these top 1% of their profession or whatever, they all have real estate. What was it for you that made you realize that the RESPs and all these other maybe more traditional saving methods weren't going to get you to where you wanted to be? Was there one little tipping point for you?
Absolutely. We had a very big light bulb moment. 2008. All of our hard-earned savings were gone. Our projected retirement returns were $40,000.
Yeah. Neal was in junior high at the time.
So diligently setting money aside. I had enough money to send maybe one kid to school. And we knew we had to do something different at that moment. Everything we just knew how volatile stocks are, how traditional planning does not work. And it's keeping society down. Like, it's just ridiculous. Now, what was this talk about minimum wage being, we're in a housing crisis because no one can afford housing. So let's up the minimum wage to $15 an hour.
Yeah, as if that's
how does that make sense? How does that help anyone? We need a mind shift change. And that's what I got from reading Rich Dad Poor Dad.
Yeah.
I experienced a total 180 mind shift change about finances, about real estate, about investments, and from assets, liabilities, all that stuff. That's what changed my life. I realized that everything that I was learning the traditional way is not good. And we had to turn things around and do things differently. That savers are losers. You don't get rich saving.
And
if
true.
you're not in charge of your own finances and you don't understand how it works, you're forever going to be a slave for money. We need to get our money working for us rather than us working for our money. I wanted to stop. I used to think trading time for money was a good thing.
Yeah.
I think we were chit-chatting earlier and you were asking, so what did you do today? And I was saying, I was playing tennis and doing this and that. And to me, when I'm on the court and I'm on there every day, I'm making money.
Yeah.
If you set up your investments properly. So what was your, was it in 2008 that you made your first investment then? Or did you grab a piece of real estate or was it within a year or two within that?
Yeah. So right after that, we started teaching ourselves about real estate. So once again, there was no community, no assistance. Yeah. We had this book, Rich Dad Poor Dad, which does not teach you how to invest in real estate, by the way.
No.
It's more of a concept and tactics and a mindset thing.
It's also of a different time to some degree.
Yeah.
Yeah.
So we ended up buying. We thought we identified a great place to buy real estate, and we ended up buying 4 homes in pretty much back to back. And they were different homes, for different reasons. Our first one was a vacation rental near a place where I used to go skiing.
Gotcha. Yeah.
And it was a very comfortable spot for us. And, we felt like, we could use it sometimes, and then we can rent it out. And
a lot of people a lot of people do that even in our market here, because it's like, okay, I want to sort of be a landlord. I also want this other thing, and I can offset the cost of my second property with rental, and it's always easy to kind of turn the rental off because you're just doing it as a short-term situation. So you feel it's lower commitment. So that is
more in control.
Yeah. A lot of people that's a good entry point. What was the other?
It was a very novice entry point.
Right.
And it was a very novice way of thinking, and it didn't make us any money. So we still weren't thinking the same way.
Yeah.
So that was our first thing. And then the other properties we were buying was in a town in northern Ontario, 9 hours from Toronto.
Jeez.
And my mother was actually born there, so there's some sense of familiarity. But I was buying $40,000 homes and renting them out for $1,000 a month.
Okay, I was going to ask, how did you put together enough cash to buy 4? Because I think that's a question a lot of people would ask: is how did you get 4 down payments in one go?
Yeah,
I refinanced my primary residence.
Yeah, we've talked about that
a lot more money than that.
Yeah,
because these were like $8,000 properties. Well, the one in and not $8,000 properties for $8,000 down payments, but the ski rental was obviously way more expensive. That was like an hour from Toronto. But we did refinance. That was the one thing that our financial planner actually ever did for us really great. As wonderful as he is great, I guess, sort of. But anyways, I hope he's not listening to this. Great. But actually it ended up, put it this way, 5 years later, we work for him now.
Right.
We are doing his investments now.
Right. Yeah.
So he was looking at us, he goes, "What happened to you? I remember you two didn't know what life insurance was."
Yeah.
And we now let us have a look at your portfolio. We'll tell you what to do.
Yeah.
And that's how that's actually a true story.
Yeah.
We were counseling him in the end.
Yeah.
After a long relationship. But he came to us one day and he was so excited about Manulife One. Mm-hmm. And this consolidated mortgage fund.
Yeah, those one line of credit across.
All that is. They were the only ones.
Yeah, those are basically like original like home equity lines of credit, right? You'd have this one line of credit over your home. Yeah.
Okay.
Yeah, that might predate Neal's.
Yeah, I haven't experienced that, but okay, so it's a HELOC.
Yeah, it's a HELOC.
We're like the pioneers of this.
Yep. Yeah, so you slept that, and you had those 4, and it sounds like the ski property maybe didn't cash flow that well, but the other ones would have been cash flowing a little bit. What was next?
Well, we realized we didn't know what we were doing, because then we got out leveraged. We had so much money left over. I'm like, I could buy 1 million of these. You're right. Like, you have no buying power left.
Right.
Yeah.
And so then we had to start looking for joint venture partners.
Oh, okay.
And we also realized, well, one thing, we didn't really know what we were doing.
Yeah.
For one thing, we need to form, before we didn't know what a joint venture partner was. Sorry. So I put this bit out of sequence.
Yeah.
We realized we didn't know what the heck we were doing. We were just buying homes and going on Tickety-Boo trying to figure this out on our own. We needed some training.
Yeah.
And so then all of a sudden, this Robert Kiyosaki was going to be in town in a hotel room. I'm like, oh yeah, but guess it wasn't him, unfortunately.
It was one of his
subsidiaries. They always do that. They always do that. I signed up for one of those real estate courses as well, and it was the couple.
Oh no, who was it?
Maybe Scott, I don't know. It was one of these HGTV couples, and they were like,
"You just liked the girl."
That's so adorable, Neal.
Kim neither confirmed nor deny why I was going, but it said real estate, and they like hyped it all up, and then I showed up, and unfortunately, due to circumstance, they can't come, but they're going to come on a little
here's
Skype.
Carl.
Yeah, exactly. Here's our guy, Carl, and they're going to come on a Skype for 2 minutes. And you could tell it was pre-recorded because they were literally asking the questions, and there was like these delays. Like they would ask a question, and there'd be like a 3-second delay before the couple would answer back. And I was like, they're literally talking to a pre-recorded thing right now to create this real estate group. It was at the hotel downtown, actually. Anyways, sorry to cut you off. I just thought that was hilarious because I've experienced that.
Well, we were in person.
Yeah. Oh no, we were. Yeah.
Yeah, like, so we were like sitting here. I was like really thinking maybe he'd come. I didn't know. This is before all this stuff was really going on.
No, totally. You'd expect him to be there. Yeah.
So anyways, he wasn't there. Very disappointing. But this other guy was. And he said some pretty great things. And then they were giving out books and hanging $10 bills, and people are railroading each other to get up there. And end of the day, they sold us a 3-day course for like $300, or I heard it's a lot more now. Anyhow, so we're like, do we, don't we? Like, what do we do? Should we do this? Can we be anywhere for 3 days? We have babies, all around us. Anyway, so we did it. And this was just great. It was more of the same thing, but I did my research before and found out is this a scam? I was all freaking out and blah, blah, blah. Anyways, so we learned some really cool things. So we're already learning new stuff. And then we learned a little more new stuff. And now we're learning even more stuff here about real estate and all these amazing strategies and all this sort of stuff. But then after that course, you have to take the super duper course.
Yeah, the old classic.
Because otherwise, I equate this to teaching someone how to read and stopping at Q.
You're right.
In the alphabet. Yep. So I have these notebooks full of strategies, and I can't do anything with it because I don't know. I don't know the other half.
Yeah. We get that occasionally. Someone will reach out, and you can tell they're fresh out of some seminar, and they've got all the acronyms in the world. And then now I want you, Mr. or Mrs. Realtor, to take it over the finish line, but they don't have actually anything in place. They've got a lot of book learning, but not necessarily a lot of doing. So did you upsell? Did you go to the other course, or did you branch off again?
No, we went. We committed. We went. We were so programmed at that point when they're like, stand up if you're it. And so because it's all this NLP stuff. So we actually legit stood up.
They do that. Yes.
And then
No way.
We're the only ones who
stand up if you what?
And you know what they said? They're like, great, go over there and pay.
Oh, this is the exact same thing that they did at the one I went to.
Stand up right now if you want to take control of your future. You stand up and then be like, all right, now go over here and pay.
Literally.
And then what are you gonna do? Sit back down like, I don't want to take control of my future anymore.
Go over there and sign up, and then you feel like you have to. Yeah, you feel like you have to.
Reward.
There's a group of people.
For being an action taker.
Oh my God! No,
amazing! I love it.
I don't know, but I did it. We did it, and it was a fortune, and we learned a lot of really great things.
Yeah, so there you go.
They're in 3-day increments, and one thing we really did, the reason we were successful, or not successful, I don't know what you just find successful, transactional maybe, we actually did the work. So we knew what this meant to us as a young family. We knew what this meant as a financial commitment. It was very, very expensive. It was a lot of 3-day things. When you have young children, that's something really to consider, because our kids were really babies back then. And to even get care, we don't have any help with that. So we did it, and we learned all these great, amazing strategies, and we met all these great, amazing people who were also keen, and it really kind of expanded our mindset and our way of learning. And that was fantastic. And but we really wanted to make sure we were getting our money's worth. And we really went out in the field and implemented at the exact same time.
As a group, like the group you went through with, or as you were taking the course, you were putting these things into action right away?
We were given the knowledge from the course, and my husband and I had to figure it out on our own when we were putting it in action.
Gotcha.
So real estate is very difficult when it's when you're doing it in real time than in a classroom.
Reading a book and being taught, it doesn't sound too bad, but it can be a little bit more challenging in person.
So then what was the first specific thing you did out of that course? Like, what did you take from it that most stands out that you put into action right away, for better or worse?
That's a really great question. I think that would have to be, it was either rent to own or wholesaling.
Oh, interesting. So I love people who find their lane in something very different than what I've done and that.
What people traditionally expect when you're talking about real estate, there's, like we said, like last time, there's so many different options. And so stuff like that, again, wholesaling and rent to own are very alternative things that people don't necessarily think about automatically.
Yeah.
Yeah,
so,
and those were just two, because those were things they touch on. But anything they taught me, I'd go out and do. So at the end of this course, our first year of real estate, we did over 100 transactions.
Wow.
Whether it was wholesales, assignments, everything, because we wanted to get our money's worth. So we were doing commercial real estate, residential real estate, land development, cottages.
I got to press pause here.
Wholesales, everything.
I got to press pause here so people heard that correctly, because this is a real person doing real things. Your first year in real estate after this, you did how many transactions?
Over 100 transactions year one.
Over 100 transactions in year one.
Now, so that we're clear, which is insane, and I'm not trying to describe, but she doesn't mean she's buying 100.
Yeah, but you're
properties,
doing
right?
100
exactly.
plays.
100 plays within real estate.
Yep.
Again, so it's not like you have to have $5 million ready to roll. But yeah, so and you did this through a method of wholesaling, saying, and other options.
And this isn't a good thing.
It's still impressive, but
but then I thought I was it. Like,
oh yeah, you would have been.
I thought I was, and I always say Donald Trump before Donald Trump was Donald Trump.
Yeah,
Like I thought I
You're
was
feeling
just
yourself.
like
Yeah.
the Mac Daddy of real estate.
Yeah, I've dealt with a couple
was
people like that too.
delusional. I thought real estate was the only way to go. Active real estate's the only way to go. I'm so amazing. I had phones and I lost my life for 3 years.
Oh my gosh, I
I
can't
never
imagine.
saw my kids. I
Yeah.
worked 20-hour days. We were both delusional. I don't know what we were doing. And we made $1 million in mistakes. And we wrote about it in our book called Real Estate Mistakes.
Yeah.
And so at the end of the day, we made a lot of money. So much. And then we lost so much. And it was just
How did you lose the money?
Because
Because that's always just as interesting as getting the money.
Yeah.
I'm not afraid to say I made mistakes. Everything I learned in real estate and from all those courses, because I learned too much and went too fast too soon. I'm a very excellent wealth consultant because there's very little I have not done in the industry.
So you were doing some land development, you were doing some rent to owns, some assignments and some things of that nature, and you had scaled up and you did this, it sounds like, for 3 years, and then things started to go sideways?
Things were going sideways probably during the entire 3 years.
From a mental health bandwidth standpoint?
9 unfiled tax returns.
Oh,
Okay.
Gotcha. Yeah, that'll get you. That'll get you.
Yeah.
I had to get my ducks in a row. It took us years to even sort all that out. Like everything that I was taught and doing too much too soon, I had to undo and figure out really why am I doing this in the first place. And it was to be home with my kids, and I wasn't home with my kids.
Exactly. Yeah.
And I was
Your
not
end goal.
authentic
Preach.
to myself.
Preach. Yeah.
And it wasn't until someone looked at me in a mastermind, a business coach, who just shot me down right in the spot.
Yeah.
And just told me straight up, you're a fraud. Like, who do you think you are, lady? Like, you think you're busy and you're so successful just because you're so transactional? Because I was the same way, and I lost my life, and you're losing yours.
Yeah.
And why? If you were that successful, you wouldn't be doing so much. I thought I was one of those annoying people that went to the room and wanted 100 properties.
But it's hard. It's hard not to get down to that situation, because once you have success, I find like it's addictive. Yep. You have success with 1 or 2 of these deals, or 1 or 10 of these deals, and then you immediately want to keep doing them because you're like, that wasn't so bad. I understand how the system works. I can multiply this by 100 and keep cranking it out, and so you're making money and you're going crazy with it. Yeah. I mean, yes, you might have missed some of the numbers here and there, but it's addictive when you're doing it. In real estate, it's sexy. Like, you can tell people, like, I cranked out 100 deals this year. People are like, oh,
totally.
Wow.
Oh, I own this property. I did this. I did that.
Saying that.
Yeah.
Okay, so you did 100 deals this year, 100 whatever. Like I did 100 this or that, whatever. Like, who are you even really impressing? If you're doing real estate right, you could change your entire financial landscape with 1 property.
Yep.
Yeah.
And I have a webinar on that, how 1 property can change your entire financial landscape.
Yeah. I mean,
easily.
Yeah.
Easily.
If you actually realize what you're doing it for and can step back from the ego of, well, I'm doing it to say that I'm doing it, or for what you think is the good reason. We talked about this validation from outside and what it looks like when you're doing these things, and people often mistake action for progress and kind of don't look at the consequences, or, that's something I struggle with because real estate sales are very transactional.
Yeah.
And I like doing a lot of transactions. I take pride in that. But is it affording me the lifestyle that I want?
Lose sight of the end goal.
Stop right there. What did you say? Real estate what is transactional?
Sales.
Because you're a what? You're a salesman.
Yeah.
You are the real estate. That's your role. That's one of your income streams. And for that, you should be transactional.
Yeah, for sure. I guess,
number one.
Yeah, in trying to kind of pivot to a better overall quality of life, it's how to systemize some of these things and how to invest. And then even with the investment side.
Another stream. It's an amazing stream. I love it. Everyone asks, why aren't you a real estate agent? Blah, blah, blah. I love working with agents. I love you guys. You guys are awesome.
Yeah, we're all right. That makes one of us.
You will make so much more money.
Yeah.
You are, and it's such a great residual stream of it. And you help people. See,
Totally. I
people
mean,
say
that's
they don't want to use realtors, and they want to, my realtors, I work with hundreds of realtors and I love them.
Yeah.
I could not do, and these are realtors all across the globe. I could not do what we do and help people if I didn't have amazing realtors like you guys.
So what was the next step? You obviously were burnt out probably after these 3 years. It wasn't what you'd imagined. Maybe the money was coming, but it wasn't necessarily affording you the quality of life. So what was next?
Oh, no, sorry. None of that's true. So I was delusional. I wasn't burnt out. I probably would have kept going if I didn't meet this business coach.
Interesting. I love this.
Who shot me down at a mastermind right away and said, you're full of caca and you're not being true to yourself and blah, blah, blah. And so I was like shocked, and my husband was shocked. And so I hired him the next day as my coach. I was shocked, insulted. I wanted to punch him out.
Book there.
And I hired him. Hired him the next day. Worked with him for 5 years. He changed my life.
Okay,
He
well,
changed my life.
and this was how long
He
ago?
wasn't a real estate coach. It was a business coach.
Yeah, how long ago was this?
Ooh, this would have been about
2012, 2013.
This would have been about 9 years ago.
Yeah. Okay.
2012.
So tell me what life has looked for you since, and what new kind of approaches are you taking that you found to be different and better, and what you should have maybe been doing from the jump?
A less is more approach. You need to do a less is more approach. People need to figure out what it is you really want to do this for in the first place, and learn what strategies that will help you get there. And also learn that you don't need to quit your job if you have a job. You don't have to be, not everyone has to be a full-time investor, but everyone has to have real estate in their portfolio.
And I think that makes it so much more accessible and so much less intimidating, because we've talked about that. It is work, but we can't advocate for quitting your day job, and it's really refreshing to hear someone say that you don't have to. Let's get into a couple of these others. Neil was going to ask something about private versus public options.
Yeah, well, I mean, I think that, and that's what relates to what you did, I think, after this, where you said you probably changed your strategy a little bit. And like you said, you didn't necessarily go into it full on where you're constantly involved. And so you came up with some other options. And so some of those things that we were going to discuss was the difference, first off, between some private investing options as well as some public investing options. I can say for a high level on public options, for people that's like ETFs, investing in REITs, very hands off, very clean and easy.
Yep.
Fairly low stress for the most part. Like nobody wants to watch their money go up and down. But it's not like a crazy thing. You don't typically see a REIT go down 10%.
A lot of REITs pay dividends that are solid.
Yeah.
You can reinvest them. It's kind of set it and forget it. It's not sexy per se, but
you have no real control, to be honest. Though, like, even if you put $1 million in, that probably the REIT's probably got about $5 billion. So it's like you need. It's not like you're going to necessarily move the needle.
No.
But it allows you to kind of track what's going on in the market. And ETFs are a similar standpoint. On the private side, I think this is what we're more interested in. I think this is the path that you took more so with your investing and what you do in your business now. I have down here like JV partnering, and you alluded to it earlier. What is kind of doing a JV partner? Kind of what does that look like? And did you? I mean, I imagine you did some. So it will kind of give us some talk on that.
I'm doing one right now.
There we go.
I was just telling you about we're listing a flip house today, and we're doing that with JV partners.
Okay.
And so for JV partners, sometimes if people want to do a project with us, we will use JV partners. This, for example, is a flip property that we're doing. So in our JV partnerships, in that regards, I'm the active partner.
Okay.
So we basically partner with people who don't have the time or knowledge about real estate, and they like what we're doing. I don't look for them. They come to me.
They've got cash.
Like what we're doing, and they want us to grow their money for them through active opportunities. So I, as the operating partner, will be in charge of the acquisition, and they have to be in charge of qualifying for mortgage and all monies involved in the transaction.
Okay.
And then we split everything 50-50.
JV, by the way, obviously, I never even said, but joint venture, right?
Yeah.
So it's when you're partnering with somebody else. So you're saying you're the active partner. So you, in this case, you were handling all the renovation and preparing the home for resale, because this was a flip. So it would have been, I guess, demo, reno, and then preparation for the flip.
We handled the contractor who.
The contractor.
You weren't in there swinging that hammer.
Did you have to do, like you said, they came to you? Did they come to you with the money, the mortgage, and the deal, or did you kind of have to analyze that deal and say, like, here's a good deal sort of thing?
Oh no, they don't know what they're doing to find deals.
They show up with
no
the
one
cash.
knows how to find deals. That's my secret sauce.
That's everything.
Yeah.
Deals. I have deals, I have teams, and I have systems.
Yeah.
Okay.
And so I have deals like nothing in today's market that's on MLS or anywhere is going to make you any money. All of my specialists have off-market opportunities, and I find off-market opportunities, and I teach other people how to find great deals.
Yeah, we've said this time and again.
Yeah, deal myself. I actually was proofing a course that I was doing again on finding great deals, just to see how I could improve it. And I just put myself through my course, and I found 3 properties in 1 hour. One was in downtown Toronto. It was absolutely incredible property. The other one was in Barrie, and the other one was in Markham, right around where I live, right around the corner from my house. And they were all FSBOs, and these are not easy to do. But I put myself through my course. I found these 3 properties. I ended up assigning one of them to actually one of our students, who's now doing a small land development on this property in Barrie.
Yeah, we've talked about assignments in our.
And I went over to this one in Markham, right around the corner, and I ended up closing on that property, and we got it for almost $220,000 below fair market value.
Oh wow!
Secured this property, and that's the only way that we were able to flip this property.
I thought the Toronto market was hard. Giving houses away.
Sounds like they're giving houses away out there in Toronto. Well,
we just townhouses here. I'm surprised. In the last week alone here where we live, and this isn't even downtown Toronto. This is in the suburbs. But 3 townhomes. And these are middle townhomes. So how big was a middle townhome? Maybe 1,600 square feet.
Yep.
Middle, no.
Yep.
1.3 million. So
my heart
this market's just ridiculous. Ouch. So you can't find anything. We actually found this home, and we find a lot of homes. My criteria is under $1 million. And I find properties. We found one of our students a property for under $1 million in Toronto. We do it all the time, and it's not easy, but it's done.
Do you think the massive, just on a aside, do you think the massive prices allow for there to be more fluctuation? Because it's like, all right, well, 5% in the difference on that place is $70,000. Like here, our market is so tight. Like we were talking about earlier, it's hard to flip a house because we're buying them for $250, and then the flipped house is only going for $400.
It was very difficult to flip houses until more recently, where our market started to have that spread.
You're missing the point, though. It's all relative.
Yeah,
because
it's all in the buy. It's all in the buy.
$300,000 or $200,000 buffer, I wouldn't have any margins. There's a lot of things that go into house flipping people don't consider, like our soft costs alone. Like all of these expenses before everyone just thinks it's purchase price, construction, and resale. We'll talk about your financing, your holding costs, your breaking your financing, your land transfer tax. In Toronto, you have to pay that twice. So there's a lot of things that go on to it. That there's $100,000 in soft costs alone.
And the thing that people seem to always forget too is that without the buy, there's nothing. Right? People are so hot to trot. They're like, I want to get something and I'll make it nice. So I'll make it worth this. Like, no, you only make money really off the buy. Right.
No one else is selling renovated homes here. These homes, those $1.3 million townhomes were dumps, by the way, too.
Crazy.
They weren't even renovated.
Crazy.
People aren't even doing anything.
So what are some of the pros and cons about? Let's look specifically at a JV partner.
Yeah, I was gonna say the two things with the JV partner, like what a common structure looks like.
Yeah.
Kind of on average, like so you said, they brought money, mortgage, you found the deal. What's kind of the breakdown?
For like money?
Yeah, on a monetary scale. So I think we understand that you handled the contractor, you found the deal. I'm not sure, you probably maybe picked the agent as well for the resale. But on the money side of things, how do you guys typically handle it? I know it's different for every deal, but I think what would be like a standard, what you'd say is a good, fair thing that somebody should be looking for when they're doing a JV?
50-50. I like 50-50. So I don't put any money in my deals.
Right.
I don't have to.
They bring in the money.
Experience. Yeah. They do all the money, and I get them astronomical returns.
Right on.
And that's a win-win for both. And I like 50-50 because I believe that partners are 50 and everyone brings something valuable to the relationship. And when it's 50-50, then I just feel like it's a win-win. Now with buy, rent, holds, and I do have buy, rent, hold with JVs, because a lot of people are like, I want to do it, but I just don't know how, and I want to shadow, or I want to do it, but I just don't want to deal with tenants and landlord, like all that sort of stuff. So the way we do it with them is the same way, except if we do a BRRRR, we split that 50-50 as well. A lot of people do not. You
split the takeout 50-50.
We split the takeout 50-50, and then we continue to manage it, and we'll split cash flow 50-50. Sometimes there's not cash flow to split.
Oh, so
we
you
only invest in high growth areas.
right. So you'll sometimes end up on these JVs longer term if it's a hold. Like they're not all just sold at the end.
You have to do long term. I only do 5-year for buy, rent, hold.
Right.
I don't do anything in real estate.
So you do either flips or 5-year holds.
Oh yeah, flips, 5-year holds, unless it comes to a time where it's a good time to sell. So for example, this JV partner came to me about 1.5 years ago, and they wanted to invest in a high growth area. We bought a property together, and the property's gone up $150,000 in value. And I don't see this area going much higher.
Right.
I think this will be an area, it's a great area, but it is fictitiously high.
Right. So now you're thinking
here where we live, where, this is really expensive, whatever, it's a different kind of risk. With this area, it's farther from Toronto, but it's still it's actually Windsor, Ontario, which is a really great market. But now the average price of a home in Windsor is like $500,000. And I'm not sure if that's sustainable for that economy, given on the history of that. We only paid $200 for it.
Right. So
and now it's up. So I'm like, why don't we sell?
Yeah. And if you have
would we hold on to this? We could sell this and buy something else. And
going into it in a situation like that, do you have a preset like exit strategy? If someone wants to pull the chute and there's maybe a disagreement on that, you have that structured in the initial agreement, I'm sure. Yeah.
Absolutely. There's always buyout clauses in your JV. So all of our members, they have access to like this template. Our first JV was 1 page. Our JV template now is 27 pages. It took us years and thousands of dollars to get to that point. But it really outlines a lot of important things for JVs. And then it also talks about the roles of the JVs. And then obviously the actual partnership in question. And so what happens if you want to sell or whatever, you could buy yourself out, or if we agree to hold it until blah, blah, blah. So all those things are in the JV agreement for sure.
Do you ever incorporate and then have a share structure, or what's the ownership structure?
Because I don't like to work with a lot of people.
Right.
So that kind of goes into your second thing where I love to invest now. Really is because I have a lot of active real estate, and then I have active real estate with JV partners. So that takes a lot of time. So let's talk about what a pain in the butt real estate is. So everyone here should know that real estate is painful, it's an annoying, and it's whatever. But obviously we love it because it gives us access to life we otherwise couldn't achieve, which is why I got caught up on all the hoopla to begin with. Is you'll make it's big money and it's big transactions and it's exciting, and that's why I got so caught up.
It's addictive too. It's flat out addictive. I'm
supposed to be a teacher, and now all of a sudden I'm doing this apartment buildings. This is like little old me. That was the ego side. But now I prefer in these larger opportunities to do what we were talking about earlier, which was the passive investments, and I love private market products. So I was actually learned all about self-directing all my registered funds. So all that money that was $40,000 projected returns in these normal REITs and all these other sort of things, I pulled everything out and I put them all in private market products. I pulled my kids' RESPs in private market products, all these sort of things. Now I have investment. This is what I'm consistently investing in. Self-storage opportunities. These are big funds, multi-billion-dollar trusts, but they're private. They're not publicly traded. REITs are publicly traded. You have little control. You don't know where your money's going. It's just dispersed. Plus, it's all sustainability at that point. In the private market world, this is where the growth is. All those REITs that everyone's investing in now, they were once private. They were once private. So this is where you want to get in, is you want to go in to amazing opportunities. And I didn't want to be in charge of this because I've seen my capabilities and what I could do. I can get a much higher ROI in active real estate and doing all this, but I see how much work it is. And I think when I regain my focus, I want to do one thing. I just want to work with funds who are doing one thing, and I'll have a smaller piece of a pie.
But you get to play tennis.
Than having the entire pie, and I don't got to do any work. And that is a passive investment, but there's so much growth. I can research. I can meet the directors. I can vet these people, their track record, their history, their previous project, and I get like front row seat on the growth of these investments. And they're from licensed professionals that protect my money. So they have to answer to the Securities Commission.
So, but this can also be intimidating for different reasons. Some people aren't feeling comfortable to walk into these rooms and feel, again, they get that little me, idea
by the big
this
bad
is where
private
the
guy.
top 2% are growing their money. The top 2% do not do things everyday people do. They are not putting their money in REITs and whatever. They own the REITs. You know, they're in the early opportunities, and we want to help people overcome this little old bee and take away that fear by educating them and giving them the information they need. We're all about education and empowerment. And that's why we did our rebranding to RPI Education, because when we were Real Property Investments, I was on our website, it made us sound like we're an investment firm and people had to invest with us.
Right.
And I had properties that I don't want you to invest with me.
Right.
I want to share our power teams with you, learn what you want to do, and help you invest for yourself with getting this education required. So I was actually on another podcast where this person asked to interview me, and they were practicing their coaching skills. It was kind of like this backwards podcast.
Okay.
And she called me on that. She said, RPI, our Real Property Investment, sounds like an investment firm. You've done like $1 billion in transactions, blah, blah, blah. It sounds like you want me to invest with you. And are you a fund? I'm not a fund. Then why are you making yourself sound like a fund?
Right. Yeah.
Why don't you have education in the title? 3 days later, rebrand right away. So when I see something that needs to be changed, we go in and we changed everything just from an outsider's perspective, because to me, that meant the world. And this is what these people need to get over themselves and learn that you do deserve to be in that room, or even behind your computer screen. You need to start thinking differently, acting differently, and investing differently. So if you don't, you're going to continue to be this statistic.
I think this is really interesting because I've never really heard someone, I don't know if critique is the right word, but these things are so in vogue, these JV, active, flips, this, and you're someone now who's gone through that and says there's even better. If you thought that was good, you can now testify to your experience that there is something better. And I don't know if I've really come across that a whole lot, to be honest with you, because every single thing that we see is trying to sell these programs devoted to, like, you would be up there with those 100 transactions as the poster child for these programs, and now you're saying there's something else. So maybe let's unpack those private opportunities a bit more.
Just a little bit, yeah.
Yeah, what would you, the elevator pitch, and I hate to say that, but to someone who wants to learn about that, where would you start with them?
Are you tired of low or no growth returns in your registered funds? Do you want more control over your investments?
I'm standing up. I'm standing up.
Reserved for the top 2%.
Yeah.
Because now it's since the eligible investor status came, and I think that was in 2016, was it? 15?
Not sure, but yeah.
I think it was earlier. It was like 2012 or something. Anyways, when that changed from just the accredited investor, there was a huge party going on that only the rich people are invited to.
Yep.
And if you're not an accredited investor, you couldn't do this. As soon as they open up the door to eligible investors, and everyone is pretty much an eligible investor, at least if you're investing in real estate, you should be an eligible investor.
Yeah. You got some credit.
Now everyone's invited, and people need to start thinking differently and thinking like the big boys. Now, finance has a history of talking over people's heads to keep them dependent on financial advisors. And I'm the ventriloquist here, where I work with the top people in the industry, the smartest minds, the best financiers. And they say blah, blah, blah. And I'm like the ventriloquist sitting next to them, their dummy, going, what he's saying is, and we break down this to layman's terms and everyday concepts. Because the reason people don't understand is because they're talking over them. Whereas real estate is simple.
Yeah.
But investing is simple. Warren Buffett says if a 4-year-old cannot explain the investment with a crayon, do not invest in it. Right. All these projects that I invest in are super duper simple. Yeah.
So everyone knows kind of, all right, well, the starting point, I understand I need to get, if this is the other approach that maybe is somewhat in your rearview mirror, but maybe what you start with is I need a great deal on some bricks and mortar, and I can understand the Burr method. Yeah. That now people understand. With these private investments, where do people start from that? Because that's another thing. I don't know where to start. That's what everyone says with everything.
Well, that's why the first thing we do with people are called intake calls. And I've actually created a methodology where we overlook someone's entire some strategic questions, financial plan and their mindset where they want to go, and show them exactly, that's what we do at RPI, show them where to start and then connect them with licensed professionals to help them get there and hold their hand, because we never had anyone holding our hand. We had the knowledge, but we were alone in the construction field doing all this stuff. No one was there to help us. And it takes more than knowledge. It takes a supportive community, and that's really what we're trying to do. Now, in the private market world, what we teach people how to do, first of all, is the importance of self-directing the registered funds. Most people have TFSAs, RSPs, a group fund. I also forgot to mention, my husband doesn't work now either because of this. So on his 40th birthday, he went in to his employer and he resigned.
Punched him in the nose.
And it took us 5 years to do it, and he did it.
Punched him
and
square
it
in
was
the nose.
amazing. Now we're both home. We're both home with kids, and we're both playing tennis, and we're both
That's exciting.
having that dream.
Good.
And
That's
he actually, all the money that we were matching with the group employer and all that stuff, we pulled that huge chunk of change out that we did save up, and from his group fund, and because now it was transferred to a LIRA. And we were able to also, on top of our RSPs, our ESPs, and our TFSAs, our LIRA as well. So once you learn how to, and it seems like it's so much, people think they're dissolving their funds or they're dissolving their register funds. You are not. You're simply transferring. And we use Olympia Trust. That's my favorite portal. And it costs $150. And there's simple step-by-step instructions on the website. And if you are invested with a particular issuer, they can actually help you walk you through that transfer. So you don't really even have to do it yourself. But people get psyched out, and I think even that is hard. Change is hard because change is scary.
It's stressful too. You're moving a big portion of money around.
The first thing you could do is start investing passively this way. Now, apartment syndications are usually $25,000, $50,000, whatever. They're a great way to invest too. I do apartment syndications. It's a bigger chunk of change. In the private market world, obviously you're going to have a certain amount of capital available.
How much are you talking?
I mean, even with Addy Investments, we just had presented RPI, and they're not the private, but you can invest for as little as $1 with Addy Investments. And these are top 8 asset classes, up to $1,500. But that's a totally different tech crowdfunding concept that we could get into after. But for the private market world, obviously you have to have a little bit of money available there, but then they could diversify it for you, but you pick. It's not the question that I got from the mutual fund company. What's your risk tolerance? Low, medium, or high? And then you never hear from them again.
Who's diversifying that investment for you on the private money market side? Like, who is doing that?
An EMD, a licensed exempt market dealer. So that's another point of security that, I mean, you guys could go out to your local groups and your REA, and there's going to be some guy, just like the guy in the room, who's doing the LLC and whatever, and you can buy his apartment thing too. This to me is an extra layer of protection. When we work with people. I spend most of my days vetting investment opportunities because I grow my money as an investor. And I talk to 99% of stuff that I hear. I don't move forward with, because a lot of it is everyday people that are just, starting out and doing it, where I prefer to do it with. I don't like that share structure. I like, licensed professionals. They have something to lose. They have
100%.
There's
for you. They have someone to answer to.
What
sort of thing?
What is a EMD typically looking for you to come to them with? Like, are they saying, like, if I call him and I said I got $10, he's probably going to tell me to go pound sand. But if I said, okay, do I have $10,000 or does he need $100,000? What do they want to see for us to get involved in, like you said, some of these storage plays or new developments, let's say?
So you always want to invest in opportunities that are not very lucrative for the issuer. This is the same thing with insurance. We're really passionate about infinite banking insurance. This is our new, actually blockchain is my latest obsession. Infinite banking, we've mastered now. I love that too. But I get onto these things, and this is what I'm supposed to be doing, is learning and sharing. So with commissions structures and this and that sort of thing, it's not very impressive on their part. And obviously time is money too. And these are people who are used to dealing with the top 2%. And it really is a volume play. Anyone that works with RPI, they feel our mission to work with everyday people. And they understand it's not the same thing. But at the same time, it takes the same amount of money or time to do a $10 transaction than it does a $10 million transaction.
Right.
Yep.
Well, I would honestly say for some of the private market things, normally a book of $100,000, if that's all this person was going to do, would be very, very strong point. But I've seen people do things $50,000, $75,000. Now, if they know they're working with us in real estate and they're looking to do BRRRRs and they're looking to do different types of transactions, you have to realize there's also a strategy that they're going to reinvest that capital as well. So that's why a lot of the wealth professionals love to work with us too, because they see how we can take everyday people and make them make more money than they ever knew was humanly possible. When we do BRRRRs, our investors are pulling out between $75,000 to $150,000.
Yeah.
And this is just after a few months.
Yeah.
This is the average family makes $75,000.
Yeah.
Real estate, you do a couple of these.
Sky's the limit for sure.
Even one of these, this
Totally.
is more money than.
Yeah, so they know that then,
year.
these folks could have capital free up in lump sums coming down the pipipeline. So there's a bit of a long play from their perspective too.
What is an EMD charging on a commission basis, like just out of curiosity? So I'm giving them $100,000 to invest in one of these storage plays. What am I expecting them to charge me for doing so?
Very good. So all the fees, and it's not big on your part at all, especially when you can compare that to the public market things as well, because you have to look at the publicly traded markets and when you're doing mutual funds, right? If you review your past 5 years of returns, you're going to get 5%, okay, which isn't bad, 5%. Minus 2.5% management expense ratio fees, and then minus 1.3% inflation. What are we growing our money at? It's under 1%.
Yep.
So here, with the private market world, they have fees. They are not costly, and they're disclosed to you. So you know everything written out in front of you of what they are making and how these fees are allocated. This has to be all clearly written out in the share structure. And you want to hear a funny thing is that you are more informed when you're investing in private market products than you ever will be, except the first thing you read, and this is a securities thing that you read on the statement is, I hope you know that you are I don't know if it says, I hope you know.
Yeah.
Or it's a little more legalese than that. But you are investing in a high risk investment. You could lose all your money.
Yeah.
This is how risk. But do they tell you that in stocks and mutual funds and
no?
All these things?
Somewhere within probably your web broker platform, it probably says that. But
the fine print. I'm sure.
Exactly. Somewhere deep within the fine print. But no, it's
they
not.
Don't tell us that.
It's not right in your face.
Chart.
There, but not to
They
your
put
face.
the chart in the back of the cubicle.
The first thing you sign here, it says you are entering a high risk. It's like this here. But here's my question to you. So they want us to invest in the banks, and they want to invest in these things that we could easily are as risky. Where do you think they're growing their money?
Totally, by lending it to these private corps anyway.
Exactly.
Yeah, 100%.
So we want to be the bank. We want to do what the banks are doing. And that's why I love private market. I get that the diversity. It doesn't have to be lots. Sometimes I have $5,000 here, $10,000 here, $20,000 here. I could even do cash investments on an ongoing basis every month.
Right. But in terms of a commission on $100K, it's approximately what?
I do not know.
Okay.
I am not licensed, and they would have to disclose that.
Gotcha. Yeah, fair enough.
What's
this way? I gladly grow my money in the products.
Yeah, your net percentage is
as well,
still good.
And I have no qualms in it's not the same as and this is the thing is that most people in the private market world, you have to realize, left the traditional world because what happened was they realized the same thing that Vaughn and I realized when we were doing things the traditional way, it wasn't working. So they figured out how to do their own things. They started going their own money in private market. And then they felt a bit like a heel because then they're going and telling their clients to invest in mutual funds.
Totally.
When they're getting all this success in the private market. So that's why a lot of EMDs do that shift from typical financial planner over to the private markets.
Gotcha.
Yeah. So last question about the private money, just because we're starting to run up on time here. What's the timeline on that? So when you make your $100,000 investment, when am I going to be able to get my money back? Am I able to withdraw it 6 months in, or do I have to wait until the project goes through full completion, or what is the kind of the tie down on my money? It's through the full length of the project.
Well, first of all, you wouldn't put your whole 100 in one basket because that's not allowed through the Securities Commission. So you're not allowed to over diversify. So you're very, very protected.
Cool.
Second of all, you are not liquid for 5 years. Depends on the term. Now, the private markets I work with, the agencies that I work with and I invest with, they have a lot of different issuers on the shelf and they can diversify. So some could be, you're paid quarterly right away. Some you're a debt partner. And so this is really where you look at your investments anyways. If you're investing in your retirement fund, you don't need that till you're 65. So it's okay
for it to be tied down for a little bit.
To that capital or get any returns. And when you learn at RPI Education, we invite you to these events too, to learn about it, see how these deals are structured. Another thing I think about people who don't have the money yet to invest in it is you should learn about it and how it's set up and then start doing things to create that income so you can participate in these types of things.
And we've talked before how sometimes someone hits the first, burn, is all excited, and then they've got this cash and either they do something dumb, buy a car that they shouldn't buy, or they're so keen to do it again that the second buy never replicates the strength of the first buy. And so they have this constant ebb and flow of being flush, and then they have a bad one, and then they get flush again. But this is an opportunity to maybe take some of these earnings, these winnings, and investing them into something long-term.
Did we make eye contact when you said bad vehicle purchase?
So at RPI, we don't buy cars, first of all.
Neal is not your target audience.
Cars, and no one owns them, which is even better. Except if you do own them, and you said those you shouldn't buy. A lot of us have those. And you should buy because we have the money to own them. And so, and I'm
talking dune buggies.
I'm going to come down to the Maritimes, and I'm hoping you got one of those.
And man, I've got a couple dune buggies that we can race around. That's my stupid car purchase.
Hit the beach.
Listen, we could talk about this all day, and I've really found this very, very, very interesting. I always like learning about people's experiences first and foremost because I find that really informative and helpful. So thanks for sharing that stuff. A question we ask everyone when we have them on, and I think you've touched on it a lot, is just what success means to you. And I can imagine you've got something pretty ready at hand and on the top of your head for that.
Oh, absolutely. Because you have to remind yourself what you're doing this for every day, right?
Exactly.
So success to me is time, money, freedom. And it really is the time, how to spend my time. And I'm really spend most of my time with my kids. On the weekends, I was like, I had the best weekend because I was in the car from 8 a.m. till 10 p.m. watching kids at sports and driving them around. And it's exhausting, but to me, there's nothing I would rather do than really be with my family and watching them, cheering them on and living life with them. So that's definitely the time that you want, but you need the money to do it. And so having control over my money and residual streams of income and really learning about people. When they join RPI, we want to figure out what is it you want to do and what's that shortage? How can we get you going, right then and there so you start achieving immediately? Because say if you're just frustrated that, I just want to go from full-time to part-time work so I can spend more time for my kids, that's what we would be helping people achieve. And we would advise on the proper real estate tools to help them get there.
Gotcha.
So that's really it. And then it's all about freedom. Like Coco Chanel says, my life didn't please me, so I created my life. I have created my life from the bottom up. I'm watching my kids create their life, and I've helped thousands of people create their best life. And we're all one heartbeat away from death. So every day you wake up, it's a miracle. This isn't about grinding it out for 5 years and working like no one else will so you can have it. No one else. Who cares about everyone else? Do this for you. Do this for your why. Do it every day and do it now. We can
Preach. I'm loving it
now.
Agreed. Times 1,000. Do it for you.
Listen, we've got to wrap up here. We'd love to have you back another time. But in the meantime, where can someone find RPI? What's the quickest way we could point them?
rpieducation.com. I'd advise everyone to check on. We have events every week that are happening. We are a global community. We have 30 chapters across the globe. We even have a community in the Maritimes. We're looking to get back into in-person events. I'm hoping that you guys will be involved in that. I'd love to do that with you.
Will you be there personally?
Yeah.
I will fly in for that.
All right,
I
there we
will
go.
fly in
Hold
for
you to
You
that.
that.
have her word.
Don't let poor
We're
Neal down.
multiplying the RPI mission. So anyone who's on here, if you're like, I can't stand this woman, it's totally fine, because there's a lot of people that are experts with RPI education that certainly are not me. And we really are that global community, and we are looking to really fill that wealth gap and help everyday people overcome these statistics.
That's
My
awesome.
life would be a lot easier if I focused on the top 2%, but
Yeah.
I could give two hoots about that. They're doing great on their own. I'm here to help everyday people, and I believe everyone could make a difference and have real estate in their portfolio, whether it's active, passive, ideally both.
Yeah,
Definitely.
we believe it. Okay, I think that's our time for today. Thanks so much again for joining us. Neal, any last thoughts before we head out?
No, thank you so much, Monica. I think it's definitely worth checking out RPI. In general, education is major key, keeping focused on your end goal. So
100%. And Neal's going to tell us what he learned in North Carolina when he gets back.
Exactly.
So, all right, thanks again.
thanks everyone for listening.
Cheers.
Bye.
When I was broke, I had rich habits. When I was broke, I had rich habits.